I had a perception, this is the outline that I have in my presentation, and I had a perception that most of Pakistan's trade, excluding oil, was with USA, Europe, Japan, and of course China, we know. But in fact, that's no longer true. In 2010, trade with neighbors, including China, was much more important than any other region. And the neighboring countries accounted for about 25% of Pakistan's trade, exports and 35% of imports. This is the what you call comparative. You can see that in terms of exports, even North America and Europe are smaller than these neighbors, and these neighbors include China, of course. East Asia will become very, very small. And for imports, again, much larger share comes from this. And if we took non-oil imports, I guess it would be even much more stark. So, what we see in the last 10 years, and since the theme of the conference is towards an accelerated growth of Pakistan, and as we heard yesterday, balance of payments because of poor export performance has been the major constraint which brings every cycle of growth to an end. Therefore, for sustained growth, we need to permanently shift upwards the export growth trend, and therefore most of my discussion will focus on exports, so talk a bit about it. And you see, last 10 years, they have become important, as I said. Share has gone up from 1/10 to 1/4 of the Pakistan total exports. And exports to neighbors grew at 19% compared with 6% in the previous decade. So that means that whatever little dynamism we see in the previous decade in exports is coming from this trade exports to neighbors. You look at that, the blue line is where it has been increasing, while exports to rest of the world growth rate has been declining over this period. And while the fluctuations are very large from year to year, but this line is always above that line. So that is something very interesting which I didn't realize, that the driver of growth, export growth have been exports to neighbors. And I think, of course, in this we were thinking that we're coming off India, the MFN and all that even would be much more important. But I just want to assume that that will take place. Exports will grow despite what Hafiz was saying, maybe not as much as we hoped for. So I want to just look at quickly, very briefly, at the highlights of the individual countries and the important trends, and then come back in detail to the countries. So if you look at that, the largest partner is UAE with 8.3 and grown pretty substantially. Also, Afghanistan has really grown 6 times. China has about 2.5 times. Trade with Sri Lanka also has increased, but not that much, and we heard about that yesterday. India has also increased, but our exports have increased double as a percentage. These are percentage shares of our total exports, and so the total has gone up from 8 to 25%. If you look at the annual data, most of these show fairly stable growth, but what you call India has been more fluctuating, but hopefully it will take off. Now, I will look at each of these major export countries, the China market, the Afghanistan, UAE, which together constitute about 21-22% of the total exports. And in this discussion of individual countries, I'll talk about the export trends as well as some of the pitfalls and opportunities. So you can see that China is the fourth largest export market for Pakistan with 6.7% share. The export structure of exports to Pakistan structure is not very encouraging because if you look at it, basically 51% is going to cotton yarn and there's a very good 10% for the chromium ores. I guess that's coming from Sandec. I always thought it was copper, but it seems to be chromium, or at least classified under chromium ores. 5% is textile fibers and 6-7% is cotton fabric. So this really is the major and the reality is that the share of cotton yarn has grown and fabrics have declined. So in other words, the growth that we are getting out of in this period is coming out in cotton yarn export, which really is a commodity and so it's good to get a new market, but that doesn't have that much value added potential. And particularly with our cotton, unless we can get cotton production up, that's not going to contribute too much to future growth. So what we need to do is to, there is a potential to increase exports given China is the second largest importer in the world. But we need to focus our discussions on FTA on our strengths. You know, we tend to focus on what we think we would like, in sense, without thinking about whether we are able to export that or the country is interested. So we spend a huge amount of time talking about exporting fresh fruits to China. At the moment we're importing about $140 million of fruits and vegetables from China and exporting $6 million to them. So all teams will go there. And at the moment, we are one of the world's largest exporters of towels, household linen, and so on and so forth. And we export in negligible amounts. And I have some friends who are major exporters of towels and this bed linen, and they say the Chinese won't buy our stuff. There's a non-tariff barrier kind of a thing there. So instead of focusing on the nitty-gritty day-to-day item which we are good at, we want to send them something which we are not yet good at. And so that's my thing. We should focus on our strengths, and which means stuff that we are exporting to the rest of the world, and we're begging Europe to give us some GSP plus or whatever, or some reduction in duty, while China is a huge market and we don't even talk to them about this. So that would be my take on the export potential. Next, I would like to talk a bit about imports, and they have increased very substantially. What you call from just 550 million to about 10-fold increase in this 10 years, and the share has tripled. But the value of imports is grossly understated. I think Hafid mentioned about the exports of India to Pakistan and what we are saying imported. The same thing is happening here. And I don't think that it's the Chinese who are overstating the exports to Pakistan. It's our people who are evading taxes. Of course, the misclassification difficult to go in until we do a detailed commodity comparison. But on the aggregate, you can see that there is a consistent difference about 25 to 30% in what they are saying they are exporting to us and what we say they're importing. And usually, the import data is reported on CIF basis and export data is on FOB. So in fact, their number should be lower than ours, but it is. So that's the intent of evasion, and this has serious implications. And as I put under pitfalls, that the rapid growth in port, particularly the high level of value understatement, has been a two-edged sword for Pakistan. I think at least there is a lot of just anecdotal evidence that many light industries, particularly in the small and medium scale, have been wiped out, and everything we see around us is coming from China. And of course, part of the reason is that it's all coming in declared at very low value, and therefore getting a very low both tax, duty, as well as sales tax, as well as withholding tax, etc. So it's just, and of course, where we don't have a local industry, then whatever the government is losing out, the consumer may be gaining, and therefore, say, like in mobile phones, that is sort of transferred from the government to the consumer, and the net might be positive, I would imagine. But for other industries, similarly, where there is lack of competition, say an oligopolistic local industry, there such a thing may have a very, very positive impact. We saw in motorcycles where production went for a few 100,000 when it was opened up to Chinese imports to over 2 million, and that's been documented by Hafiz and colleagues in the study on auto sector. So it made the motorcycle industry very competitive, and they're beginning to export because of having not been bound to the Japanese suppliers at very high prices. But so that can make a big production gain. And maybe the auto industry can benefit in the same way from opening up to India, as we were saying. That's also, as we know, you have a 3-month wait if you want to buy a new car. It's totally monopolized by oligopoly of 3 companies. So this kind of competition might shake them up and make them into a competitive industry. Looking at the opportunities, I think the big opportunity is that wages in China are rising very fast. And while there may be initially some movement into the hinterland, but there is also already evidence of moving the more labor-intensive industries to neighbors like Vietnam, and if Myanmar opens up, that may be big. So we should be there competing for this movement, because this happened before. Japan, all the NICs benefited from move from Japan, and then Southeast Asia. The garment industry in Bangladesh benefited from Korea, and so I think we should leverage whatever political capital we have and say, we want you to bring your garment industry to Pakistan, and we create some export processing zone or free trade zone. And we shouldn't try to go for white goods or stuff. I mean, they may come here, but that's a tariff hopping kind of investment. They're not going to come here to export white goods from here. So we again need to be strategic in our focus and see what is really going to be moving out of there, and then try to wait for that. And if we succeed in getting even one of the major industries, garments, China exports $139 billion of garments, so even a little bit of that transfer here could make a huge difference to our exports. So that would be my big pitch on China opportunity. Moving on to UAE, we have very multi-dimensional relationships economically with UAE, the second most important market globally, and the largest among neighbors, with a share of 8.6%. There are a large number of Pakistani residents in UAE. That's the official figure we have. I assume there are a much larger number. Official remittances are $2.6 billion. There are more than 100 flights a week for Pakistan to UAE. I asked Sarah to look it up. There are more flights to Dubai than there are to any city in Pakistan or any country in the world, that makes sense. And there are 44 flights, I think, just PIA or Emirates. So it's a huge number of flights, so great connectivity. It's a major destination for our investors and as also flight of capital, of course, but particularly in real estate, but a lot of other businesses they are setting up there. And also it's an offshore base for Pakistani businesses to meet with buyers and suppliers and bankers who don't want to come to Pakistan for security and other reasons, even for the government when IMF doesn't want to come here. So it's really a very, very special relationship. And again, I give here two numbers because in this case, the opposite is the case. We are showing much more exports than UAE is. And of course, that is because of all people trying to take advantage of the incentives that the government gives for export. So we've used as genuine exports is what is being given in the UAE data as import from Pakistan. And on that basis, you can see that it's increased fivefold. Otherwise, if you take the other one, you see it goes up and down, 2 billion in 2007 and 18 billion. And this growth seems to have accelerated at the bottom line. You see it in the second half after 2005. Besides the flight to capital that I mentioned, this is people taking advantage of arbitrage. They set off something, claim export rebate, refund duties, and bring in the money in the here and show it as export earnings. So they lose on the premium on the back market that they have to pay on the dollar, but gain on this thing. And when there was this huge incentive for export of man-made fibers, you had 12.8% of that and household linen, and suddenly it drops in the next year or two. And similarly for cloth. But since 2007, government has run out of money to give subsidies, so this gap has started narrowing. In 2009, it was reversed. So obviously, things have maybe not such a bad thing that the government doesn't have money to give for incentives. Looking at the opportunities, I think we need to take advantage of the advantages, which is the proximity and outstanding connectivity, the presence of most of the large Pakistani banks there, a large diaspora from Pakistan and South Asia to promote our exports to UAE. Whatever has happened so far has happened purely because of these advantages, but we need to strategically see what we can do to take advantage of this. And we had another paper in which we discussed this, and through public-private partnerships, I think, by supporting small businesses who want to have some offshore presence there, or supporting marketing of certain new products like foods or clothes or stuff, we could do a lot to further accelerate exports to UAE. Last, I want to talk a bit about Afghanistan. Exports to Afghanistan, as you know, we saw it expanded very rapidly. And the interesting thing is that it's a market for some of our non-traditional exports, which have a long-term potential. So that way, that's always the case. I think you move to simpler, easier markets, and once you learn how to go to them, then you can go on to more sophisticated markets. 36% of our total exports of fruits and vegetables go to Afghanistan. 40% of our total cement exports go to Afghanistan. The growth of the cement industry in Pakistan in this last decade partly has been because of exports there. And 11% of our machinery and transport equipment exports go to Afghanistan. So that is an area. Also, about 50-60% of our petroleum exports go to Afghanistan. I don't know if that has the potential, but certainly is a nice way of getting rid of the surpluses which we can't consume here because of mismatch and the refining capacity. This is just give you a quick look at the structure of exports and the opportunities. I think what Ajal was saying earlier, that we need to change the mindset from a security focus to an economic focus. And all studies show that, of course, Azam did that work on growth and DNA, and all these studies show that cultural and ethnic linkages are more powerful drivers of market relations than any political affiliations. I mean, we know that the last poll showed that, Gallup poll, that 85% of Pakistanis hate USA. But McDonald's and KFC and Pizza are the fastest expanding franchises in the country. So there's no link between your whether you like somebody, some country or not. It's really whether you like the product. And culturally, people like burger because it's seen on TV. So similarly, I think that products from Pakistan, particularly KP, there is so much cultural engagement, it would result in, they would have much greater advantage than any other country. And therefore, instead of focusing on that India will capture this market, so we got not allow them to go in there, we should focus on how we can expand our presence in that market. And we should also invest in infrastructure, particularly at the border, port crossings, in modern ports, truck ports and stuff. And really, we should be interested in peace in Afghanistan, because if you could get peace in Pakistan, you would bring economic prosperity to the border region and help break the cycle of militancy and violence. But they will be the biggest beneficiaries of any trade, as Ejaz pointed out. Peshawar used to be once a hub of international trade, and it could emerge again as a major hub for trade between Central Asia, and the whole area would benefit. And that would be, it would facilitate import of gas and power from Central Asia, which we desperately need, and also open up a market channels to Central Asia. It would allow Pakistani banks and businesses to establish a physical presence in Afghanistan, and then if they are there, of course, they would further facilitate export of Pakistani products such as food, cloth, tractors, transport equipment. These two require servicing and other facilities, and physical presence is very important. And simple machinery, which made Gujranwalas and used all over this country. So to conclude, the trade with neighbors has grown very rapidly, and they're the largest market. They've been the important driver, and I think export growth is likely to be sustained. But in the past, as Ejaz pointed out, economic relations have been driven almost entirely by political and security concerns. And we need to change that. That's the only way this country can get sustained economic growth, and they need to change the mindset. We have to put the economy first and not politics first. Though I must say, this may be difficult, because I remember reading a statement by General Gyani. He said that we're not going to sacrifice national sovereignty for economic prosperity. And I've never heard a more oxymoronic statement, but that's what the statement did. Don't quote me on it on this one, no. But really, economic prosperity no, that statement is absolute. that basically, and that economic security and economic prosperity and security go hand in hand. How can you have one without the other? Sovereignty is meaningless if you are unable to have the resources to exercise it. And so but that's our mindset at the moment. We think they are contradictory, and we will think. If we could do that, it should result in a significant acceleration in exports, which can be the driver of growth for the next decade. Ejaz called it a vent for growth, and it could both add the demand side and therefore employment, as well as relax the balance of payment constraint, which has been our Achilles heel in the past. Every growth acceleration has come to an end on the balance of payment rock, and so maybe if we can sort of move that. Thank you very much.